Let's dive into Broadcom. The stock is on an incredible run, currently trading at $369.57 under ticker AVGO, up nearly 22% in the past month and a staggering 100% over the last 6 months. With that kind of momentum, the big question is there still room to run, or has the stock already peaked? Now, as a CPA, I break down the numbers so you don't have to. So if you enjoyed this video, drop a like and subscribe to the channel, and let's get right into it. So Broadcom delivered a standout quarter, posting nearly $16 billion in revenue, which represents a strong 22% year-over-year increase. What makes this growth even more impressive is how balanced it was. About 57% came from the semiconductor segment, while the remaining 43% was driven by infrastructure software. This breakdown highlights a key point. AI's explosive demand isn't only padding Nvidia's bottom line. The massive spending by the Mag 7 and other tech leaders is spilling over into companies like Broadcom, which are proving to be essential players in the ecosystem. Looking ahead, management guided for Q4 revenues of around $17.4 billion, with $6.4 billion expected to come directly from AI-related growth. The market reaction was immediate. The stock jumped 16% in overnight trading on the day of the release and finished the week up more than 21%, underscoring the enthusiasm around Broadcom's ability to capture a meaningful share of this generational tech shift. Now, moving into the valuations, Broadcom's trailing PE is a sky-high 93, well above its historical average of 55, and the broader tech sector at 38, making it look expensive today. However, its forward PE drops to 44, signaling that the market expects significant earnings growth in the near future. Even so, this forward multiple is still more than double its historical forward average, meaning investors are pricing in unusually strong growth. In short, Broadcom looks pricey now, but the market is betting on a big earnings rebound. High reward if it happens, high risk if it doesn't. Analysts on the street are leaning heavily toward a buy, with a few strong buys in the mix, and they have an average price target of $360.20, just slightly below the current price of $369.57. So what does this tell us? Based on the PE ratios and analyst expectations we've discussed, Broadcom appears to be trading above its historical norms. But does that mean it's overvalued, or is the market simply not fully pricing in its long-term potential, especially with growing demand and investment in AI driving future growth? Personally, I think the market hasn't fully priced in the growth Broadcom could capture as it takes market share from Nvidia. Now, Nvidia has faced increasing pressure recently as more competitors are signing deals with similar clients, showing that companies are willing to spread their spending among other key players in the space. Now, that concludes the video. If you enjoyed, please drop a thumbs up and subscribe to the channel. Let me know your thoughts on Broadcom in the comments below, and as always, thanks for watching. I'll see you in the next one.